I'm sure you all have heard about this sensational bike in town, and yes, we are talking about Peloton. We have all seen these minivans going around in our neighborhood delivering those stationary bikes. In today's video, I'm going to provide some key information that will help you make an informed decision whether you want to buy or hold Peloton for 2021. This video we will divide it into 4 parts. Part 1 we'll cover about company overview. Part 2 we will dive into the financials. Part 3 is about some risks which no one is talking about. And Part 4, what am I doing? Hello everyone, welcome back to the channel Invest for Tomorrow with K, and on this channel we talk about personal finance, investing, stocks and much more to achieve financial independence. So without further ado, let's dive in. For those who don't know, Peloton started as an idea in 2012 by John Foley and his co-founders. The goal was simple: to bring studio fitness into home, but the question was how. So Peloton built their own hardware, software, created their own content with their own world-class instructors. They brought the teams of software, mechanical engineering, product design, fitness instruction, content production, marketing, music, logistics, supply chain, retail, and apparel together. Now that's what we call vertical integration. The bike starts from $1895 and the Bike Plus from $2495, which is the newer version. And on the other hand, the Tread starts at $2495 and Tread Plus starts at $42.95. Peloton also offers financing options with a small monthly payment, which makes it a very affordable product. When it comes to competition, there are few alternatives in the market in both the categories. Most recently, Peloton partnered with Beyonce to create themed workouts for its subscribers, and that was a hit. Here's a list of all the stars that work actively on Peloton. Diving into the financials, Peloton, ticker symbol PTON, went public on September 26, 2019. The current trading price is $148 with a market cap of $42 billion. An interesting fact, the share offering started at $29 and on the very first day of trading, the stock dropped 11%. That was not what Peloton had hoped for. However, even on January 6, 2020, the stock was trading at $28. However, today the stock has 4x in 12 months. There are two parts of Peloton's business: hardware component, which is the bike and the tread, and then there is a software component, which is the subscription as a service. We see Peloton business growing at a very rapid pace. The connected fitness subscriptions are up, the quarterly revenues are up, the quarterly workouts are up, which means more subscription. And this gives a very good idea to us on how Peloton's business has grown in the last 12 months. The year-over-year revenue has been steadily climbing, which is always a good sign for investors, but the earnings went down in 2020. Let's take a deeper look into the financials for year over year to analyze what is causing this. As I had mentioned earlier in the video, that Peloton makes money through hardware and software, which you can see in the revenue line. In both of these categories, the revenue almost doubled from 2019, which shows the strength of the brand. Next comes how much does it cost to produce this revenue. And for the fitness products, the cost almost doubled from 2019, which makes sense as the company was producing more hardware for the increased demand. However, when it came to subscription cost, the cost did not double, which is also a very positive sign. The total operating expense nearly doubled, which we understand as the company was scaling up to meet this insane demand. The net losses decreased from 195 to 76 million, which is also a positive sign. Overall, the financial statement does provide encouraging signs to investors as the company keeps increasing their revenue and decreasing their losses. Lastly, I want to show you all the company guidance for 2021, which investors should pay special attention to if you want to buy or add more to your position. Keep in mind, the financial year for Peloton runs from July to June. Peloton expects to have 2.17 million or more in subscription. They are also targeting to achieve 3.9 billion or more in revenue. This is almost double from what they made in 2020. Again, great sign for investors. Financials were great, but let's look at some of the risks which I feel are very important for us as investors so that we make informed decisions about buying or selling the stock. Risk number one, Peloton may fail to attract new customers or retain existing subscribers. The pandemic is over, everyone may lose interest in indoor cycling or indoor running. They might want to take that activity outside. Risk number two is future competition. And I'm talking about Apple Fitness. This is a direct threat to Peloton than any other competitor that I mentioned in the beginning of our video, and here is why. Apple is a master when it comes to vertical integration. So as more and more competitors adopt this vertical integration approach and they enter this market, it could prove to be a big threat for Peloton. So moving on from the risk, what am I going to do with this stock? The pandemic has changed the way we live. There is an everlasting impact on our consumer behavior due to the pandemic. Just like Amazon has changed the way we shop, I highly believe that Peloton has changed the way we exercise and has integrated itself into our lifestyle. There are Peloton groups in corporate all across the world now, and they all are joining together on various platforms to work out. I currently hold a position in Peloton and I believe in this company's vision and how they are changing the very fabric of workouts. I will be using dollar cost average method to increase my position in coming months. Well, that's it for this video, everyone. I hope you really enjoyed today's content. There is some more awesome content. I'll put the links in the description. Don't forget to hit that like button and make it a beautiful blue, and subscribe to the channel so YouTube can push out this content to more people who can benefit from it as well. See you next time, my investor family, but don't forget to invest for tomorrow.